Huge sell-offs for a whole week, we got big names cutting their positions as well. Hang around to find out who is making these big waves in the market and how you can position yourself to ride it back up. Last week's stock market trading was a whirlwind of volatility and unexpected twists. The market saw rapid fluctuations driven by a confluence of factors, including global economic indicators, geopolitical tensions, and company-specific news. Investors navigated through a series of highs and lows, with some sectors experiencing remarkable gains while others faced steep declines. Amidst the uncertainty, traders employed various strategies to capitalize on the ever-changing landscape. As the trading week unfolded, market analysts closely monitored these developments, offering insights into the market's response to both domestic and international events. Amidst this dynamic landscape, certain sectors stood out with exceptional performances. Renewable energy companies experienced a surge in demand, buoyed by growing environmental consciousness and increased investment in sustainable technologies. Cryptocurrencies also made headlines, with Bitcoin reaching a new record high before encountering a swift downturn, highlighting the inherent volatility of the digital asset market. In parallel, investors closely monitored central bank communications for hints regarding monetary policy shifts, which further contributed to the overall market uncertainty. As the trading week came to a close, market participants were left reflecting on the intricate interplay of factors that shaped the week's trading activities, underscoring the importance of adaptability and a well-informed investment strategy in these fast-paced times. Remember Warren Buffett? He was buying up stuff left and right, like those short-term treasuries. Then Elon Musk chimed in, saying the same thing. Now, there's some selling action happening from another influential figure out there. Here's the thing, those big 7 tech companies have been driving a lot of the market's success lately. They've been like the engine pulling the train. But guess what? Cathie Wood started selling some of those. That's what caught my attention. It's making me think about how things might be shifting in the market. Let's dive into the details and see what's going on. Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys. Cathie Wood, a big-time investor who's been making waves. She manages some major investment funds. Looking at the numbers, her main fund, which I believe is her flagship fund, has been performing quite well this year, up by around 41.1%. Let's go into a little bit about Cathie Wood and her background. Cathie Wood is an influential figure in the world of finance and investment. She is the CEO and founder of ARK Invest, a renowned investment management firm known for its focus on disruptive innovation. With a background in finance and economics, Wood has over 40 years of experience in the industry and has been recognized for her unique investment strategies and ability to identify trends and opportunities in emerging markets. Her expertise and forward-thinking approach have made her a prominent figure in the investment community, and she continues to make waves with her bold predictions and successful investments. ARK Invest's performance has been consistently impressive under Wood's leadership. The firm's innovative investment strategies have consistently outperformed the market, with their disruptive technology-focused funds delivering substantial returns for investors. Wood's ability to identify game-changing technologies and invest in companies at the forefront of these trends has been a key driver of ARK Invest's success. With a track record of delivering high returns, Wood's expertise and forward-thinking approach have solidified ARK Invest's position as a leader in the investment industry. We keep an eye on her moves because she's known for making some smart decisions that pay off. But this time around, something caught my attention. She's been selling some stuff, and not just any stuff, she's been letting go of shares in Tesla. You remember Tesla, right? That electric car company that was flying high not too long ago. Well, Cathie's been selling it, and that's interesting. She's not just selling a bit, she's been selling a fair chunk of Tesla shares. Over the past week, the value of Tesla shares went down by about 5.8%, and during that time, she's been unloading even more of her Tesla stocks. That's something to think about. And she's not only selling Tesla, she's also been selling shares of Google and Nvidia. It's not something I expected to see, but it's happening. Now, I'm not here to dissect why she's doing this. I just want you to know what's going on. These investors like Cathie Wood, they're not small players. They can make big moves that ripple through the market. So, when you see someone like her selling off significant shares in certain companies, there's likely a reason behind it. Maybe it's something we're not privy to, with all their fancy algorithms and teams of experts. The takeaway here is to keep an eye on what the big players are doing, because sometimes they're signaling something important. Now, let's talk about inflation. The numbers are pointing to something I've been thinking about. We might be heading towards deflation. That's when prices start dropping because the central bank is going a bit overboard. In this case, I think the Fed is pushing things a bit too far. They're even talking about raising interest rates, which has some folks all worked up. But, history teaches us something important. Every time the Fed takes a break, like a pause, in the 12 months following, long-term treasuries have shown positive returns. Now, here's where things get interesting. I've got a pretty straightforward trading strategy in mind. It's called the barbell strategy. Short term, we're looking at a guaranteed 5% to 5.5% gain. Not too shabby, right? And if the Fed suddenly decides to dramatically cut interest rates, that's where the real gain comes in on the long-term side. Plus, you'll get some nice interest along the way. Combine it all, and it's looking like a good plan. But here's the thing, this isn't a get-rich-quick scheme. Nope, it's going to take time. So, if you're hoping for overnight riches, this might not be the channel for you. But if you want to make the most of what's happening with the Fed, treasuries, and all that jazz, especially considering there's a lot of money being bet against these treasuries, then you're definitely in the right place. The big players who were driving up the market are now starting to sell off some of those top stocks. And you know what? There are some signs that inflation isn't spiraling out of control like some were worried about. Take housing, for example. If things were really bad, we wouldn't have seen the recent numbers we got. There's this thing called the 3-month running period, and it's dropped down to 1.8, which is below 2, a good sign. Basically, we're moving in the right direction and inflation might not shoot up crazily. Let me explain why. Think about it. Student loans are coming due, the Fed is increasing interest rates, and that's happening in October. Then you've got credit card debt piling up, adjustable rate mortgages going higher. All of this means people might have less money to spend. So, how do you get crazy high inflation when demand is dropping? Sure, gas prices are up, and student loans and credit card debt might seem like they're adding up, but these factors might actually slow down inflation. Now, I want to show you a chart that's good news for the optimists out there. See, there's a chance that both bonds and stocks can make money. It's not like only one of them will do well. When the Fed raises rates, historically, you can see that markets often end up making money. And on average, it's about a 10% gain during these rate hike cycles. So, despite all the noise, there's always an opportunity. And that's what we're seeing now. So, let's talk about what happens after the Fed pauses or stops raising interest rates. In the past, we've often seen that about 6 months after the pause, stocks have done well. They've gone up by a good amount. This pattern has been observed in various periods, like back in '88 and even now. And here's the interesting part, bonds have done well too, alongside stocks. So, it's not a choice between one or the other, both can make money. I'm leaning towards stocks, specifically the record amount of shorting going on. I think it's setting up for a massive short squeeze, which is when those betting against a stock rush to buy it back, driving its price up. I also think there could be emergency interest rate cuts from the Fed, and this combination might lead to some people making a lot of money, possibly even millionaires.